Hey you guys, welcome back to the channel. My name is Nathan, back again with another video here. I had a commenter request, had some questions about credit cards, so that'll be the topic for this video today. I don't have the commenter pulled up, but hey, shout out to you. Appreciate the topic suggestion here. And yeah, I'll give you my take on what I see from my perspective on what's going on with that. So obviously interest rates are a lot higher now. The rate hikes that have obviously been going on since whatever 2022 to now, obviously it takes time for those to actually reflect, and they do reflect now, I guess, to answer the question as far as the interest rates on that. And those are in general going to be about 20 to 30% on the balance you keep, just based on your credit, other factors, all that fun stuff. So yeah, the interest rates, they do reflect now. That time is here. It's currently reflects. And the other main thing is obviously the balances that consumers are keeping, which has skyrocketed, especially ever since probably kind of mid to early to late last year, somewhere in that range. You know, the savings rate, as far as what the savings people had, kind of went back down to 2019 levels, or even probably below. It's probably below those levels now, just with the cost of everything that I've talked about before. So we've seen, I've personally seen credit card balances skyrocket, and then and the people that I help. But also, I'll link some stuff in the description too, because I obviously look at other statistics. There's the Federal Reserve, whatever, the Bank of St. Louis or something like that. I'll link it in the description. They keep tabs on consumer lending in the U.S. for all commercial banks, and as far as credit card balances and loan balances for consumers, I'll link that. But that has essentially skyrocketed up into the distance, especially over the past 6 months or so. Like I said, as the savings from all those stimmy checks, unemployment has basically dried up and gone back to what it was pre-pandemic. Consumers have mainly been relying on lots of credit in some form or capacity, whether it's personal loans or credit cards. That's what has been driving the economy, I think, in my opinion, over the past 6 months or so. And I'll kind of talk a little more about that too, because obviously everyone, even myself, we just talk about the price increases of everything that happened during the lockdown. But what I don't see a lot of people talk about is not only we had inflation in prices, but we also had a lot of inflation in the credit scores of individuals as well. Because people, during this time, people weren't spending as much per se. I mean, people didn't have to pay their mortgage. People didn't have to pay for a lot of things. So this not only allowed people to catch up on credit, pay off balances, whether they're using some of those PPE loans or whatever other form of currency that individuals were getting during that pandemic period. It allowed for a huge inflation in credit scores for individuals, especially probably on the lower subprime end. I don't have specific data, but I'll link, I think Experian has a little bit of data where it shows the year over year average credit scores of individuals, the average FICO score, and usually it has gradually gone up over time, essentially, but it's usually been like maybe a couple points a year it would go up. But you'll see, I'll link it from like 2019 to 2020. Obviously 2020 is when everything happened. You'll see it almost is the huge rate of change to almost spike up in credit scores, almost probably I think 9-10 points or so, which doesn't sound like a lot, but when you're averaging, I dropped out of school, so I'm not gonna go too much in the statistics, but there was obviously when you have steady 1 to 2 point increases year over year, and then all of a sudden just boom, spike up during COVID. That's obviously significant in my eyes, and as far as what I see. So I think that is the reason this cycle has probably taken so long, because I don't think the economy's been too great for the last couple years. I think a lot of people are in the same boat that say that, but it's continued to chug on. People have continued to spend, and I didn't think about it for a while, but I think about it probably more now, is yeah, because obviously stimmy checks ran out, but consumers had inflated credit scores, and they went out and they took on a whole bunch of new credit cards, a whole bunch of new personal loans, whatever it is, they were able to get those access to that credit to continue spending when the savings had gone back. And I think that cycle is where we see is coming to an end, essentially, as far as banks are not willing to extend new credit to consumers, essentially. And the thing that I see in real time that matches up with the data that I look at is, I talked a lot of briefly probably a couple of minutes ago, but yeah, the consumer lending as far as credit cards, personal loans, I mean, you'll see it's been going up a lot for consumers as far as the credit cards and personal loans. But over the past, probably since October of last year, September, October of last year, I saw an immediate change as far as applications getting declined. Most of the applications I put in now, it's been continuing to go today to where most applications I put in are declined. When before that, from 2021 to 2023, it would probably be, I'd say it was pretty easy. Most applications I put in, the majority were accepted. And now, probably Q4 to now, I see that reversing as far as lending standards have gone up, and banks, it's not just my bank, I know that for a fact, are raising their lending standards and are no longer willing to loan out to any more credit to consumers who are already strapped with debt now, based on some statistics which I'll link below. So that's what I see in real time, and that matches up with what the data showed. It shows September and October, it's been plateauing ever since then up until now, where we're still just kind of, instead of like it was before where lending to consumers was going up, now it's plateauing. It's flat pretty much. So we're not issuing any new credit. I think it's, obviously, maybe we decide next month, you know what, everything's great, we're gonna lend off into the moon and maybe we'll go up again, but I don't see that happening. I think the consumer's too weak. The credit card balances, any kind of loan balances are too high for the bank to want to risk, giving them anything else, any new credit cards or anything like that. And I see us continuing to plateau there. And I can see this, that's the main thing that I can see in real time with the people I work with. I put in the applications and they're all coming back declined pretty much. So at this point, I think if this trend continues, even if we just stay flat as far as consumer loans by all commercial banks, then you're going to see this economy slow down significantly, which I think will finally happen towards the mid to late end of year or so, especially. It might even happen sooner, depending on how the job market goes, which I'll talk about in another video. But yeah, as far as lending to consumers go, I think that funnel has finally been cut off, and we'll start to see the effects of that later in the economy. But hey, what do I know? Love to hear what you guys think. You agree, you disagree. I love to hear it all the same. So I appreciate the support, and I wish you guys nothing but the best. So thanks. I'll see you guys next time.